Welcome back. I want to welcome back all my subscribers and welcome all my new viewers. Thank you for stopping by my channel. This is Chili Davis, where we talk about financial literacy and also talk about growth stocks. And also like to say, growth stocks are more important than just dividend stocks because you're trying to make up time. So if you're trying to get to $10, and let's just say both stocks, a dividend stock is $5 and a growth stock is $5, there's a more likelihood that that growth stock is going to get to $10 versus that dividend stock, which may go up $1, may go up $2, but there's a big time chance that stock can go up to $10 per share if it's a growth stock. So we're going to talk about that in this video, my top performing stocks of the week. And it was exhilarating. So the first ticker symbol I want to talk about here is ticker symbol CMG, or otherwise known as Chipotle. It was up over the week. And let's take a quick look. CMG, or Chipotle. Many of you probably enjoy their guacamole. And so we look at the stock for the week. On Monday, it was trading about $1,497, and today is trading at $1,566. So that is Chipotle, and we know this was one of the best performing stocks over the pandemic. They just seem to have the right business model to handle all the traffic and get people the food safely and still keep that solid, fresh taste. So that's Chipotle. Mexican Grill was up this week, 3% in the last 5 days. So that was one of the good stocks that performed this week. The next ticker we'll talk about is MRIN, or MRIN Software. So MRIN Software is an online advertising company headquartered in San Francisco. And they were up, looks like over 275% this week. So let me tell you, if you had invested, I know I don't like to do this, but had you invested 100 shares, you would be up significantly now, 275% in your position. So let's just say you had $5,000, you would almost now have $15,000 from investing in MRIN. Now, I don't like to invest that much in new companies because there's still so many unknowns. So if you look at the whole chart, this is how MRIN looks. There's nothing tasteful about it. So just be mindful of that the hottest stock is not always the best pick. They had an excellent week, but that's 1 week out of 52. So, but it was one of the hot stocks this week. I ended up buying on Wednesday about $11, $12 per share. It's a long-term hold for me. It's just, it got really hot, and they saw a short interest on MRIN Software. So a bunch of the day traders decided to jump in and they pushed the stock up. I mean, it was up probably as high as $25. So we'll just look to see if they can keep this momentum going. We'll see, how long MRIN keeps this top spot of 275% in the last 5 days. Now the next top ticker we had a fantastic week was Virgin Galactic, a space flight company. Now the news, there was basically over the last month, there was two big news items that happened. One, they got FAA approval, and two, Sir Richard Branson, the billionaire owner or 24% stake owner, he will be taking off next Sunday, not this Sunday, but next Sunday. He will be doing a suborbital test flight So that's happening next Sunday. And based on those two announcements, the stock spiked up. So you had last week, last Friday when they got FAA approval. And then again, this week, they spiked again based on Sir Richard Branson taking a flight on next Sunday. So that was a really hot stock. And, I'm telling people, get in now. They don't have good revenue yet, but there's just so much promise in space travel. So that's Virgin Galactic. The next ticker symbol we have is Pop Culture. I have no idea what this company does. I think it may be a Chinese company, but Pop Culture was an IPO this week, and it took off nearly 100%. So if you look at the 5-day, it was up 154%. Now, see, this is the thing. Just because you come out the gate fast does not mean you're going to be a quality stock for the next year or two. So yeah, the stock opened, I guess it opened at $30 or maybe 50, wherever you got in, and it went up crazy. It like went up 69, from 30 up to 69, and then it started to come back down. So we don't know if this is really a $30 stock. It's just a lot of hype behind it. So this again was a hot stock this week. And I want to go back to my chart that I always teach about. This is how I like to invest, is all these meme and IPO stocks, CPOP, like we just talked about, Diddy, GME, BlackBerry, AMC, MRIN. I call these risky stocks. So what I do is I do invest in them, but I don't put the whole 100 shares in. So that's my strategy. Yes, I do take a position in some of the newer and some of the really hot stocks, but I'm not backing up the truck and loading up on this stuff, because it can go either really good or go really bad. And that's not how you want to invest. Okay. Next ticker symbol we have is Eagle Aerial Systems. Now this is a drone play. There was rumors this year that they were going to be doing Amazon's package delivery. It was rumored, it never was true. And so the stock paid for that. So I got in, I think I bought some at $5, I bought some at $4, and then it shot up to $14 per share, as you can see, in January. And it took a breather, then it came back. And then the news came out that they did not have the partnership with Amazon, as there was rumored that it was, like an NDA or something. So this company was sued, and a lot of bad stuff happened, but we cannot deny that drones are coming. So it doesn't matter whether they got the contract with Amazon or not, there will still be a partner for them that will say, hey, we need drones. We'll go ahead and go with AG Aerial Systems. The other stock, if you want to do the drone play, is Aero Environment. So they've been doing drones for over 20 years, but now they will start to diversify as well, doing drones for commercial side. So the drones are here. We just don't know when they will infiltrate our daily lives. They have a lot of different applications. Right now, they're using drones for basically flyover farms and also vineyards, and they basically evaluate from the sky with a camera. They do a like a fluorescent read on the land, and they can tell whether something has poor soil or good soil. or, good trees versus bad trees, or bad vineyards, or, they can do that with these drones now. The cameras on them are so powerful. So that's where we're headed. We're headed to drones. And if you see AeroVironment, it trades around $80, maybe $90 per share. So this is about normal. Yeah, so they normally trade around 80, maybe $90 per share. So there's nothing new for them because they've been in the business. They're just moving into more of a commercial side. They do a lot of drones for the military. And so they have a guaranteed partner. They don't have to worry about money. They're not like UAVS. They don't have to worry about money. This is what you this company doesn't have money. The other company, AV, has money. They're not on a time schedule trying to get a deal with Amazon. They already have a deal with the government. So like I said, if you just look at the stock, and it's been trading, I guess, since 2007, this is the power of stocks. So every 10 years, stocks follow inflation. So you had a gallon of gas 10 years ago, it was $2. Now it's $4. And it's the same thing with stocks. 10 years ago, the stock traded at, not even 10 years ago, let's just say $40 per share. And today it trades now at $100 per share. So that's the power of stocks. They keep up with inflation. Nothing new there. But anyway, UAVS was a good stock this week, traded relatively nicely. So just keep an eye on them. Next ticker symbol we have is DD. DD IPO'd on Wednesday at, let's see, $18. Came out the gate at $18 per share, and then it slowly came down. I got in the next day at 14, and then I just, I'm doing the half now, half later. So the stock started to creep back up at 15, and then it fell back down due to the investigation. It says Diddy says it stores all its China user enroads and data in. So now they're saying it's national security. That's why China is investigating them, but we know China, so we just have to deal with that if you're an investor in Diddy Global. And this ADR, this is like a proxy, lets you know that this stock is not a company in the United States. This is just the stocks or the DD shares you buy are just a representation, a proxy for the actual real value that's in China. So remember, and then you also have to pay like a $2 fee per year to own, like a Chinese stock. So anyway, just keep that in mind when you see this ADR and you're buying a stock that is not originally from US. Next ticker symbol we have is Cleveland Cliffs. They had a great week. Again, this is a iron ore company specializing in mining and pelletizing it, and basically help America with the steel and infrastructure play. So this is what Cleveland Cliffs is doing. Some weeks they creep up like they did this week. They was started the week at like $20 per share, and they ended the week at $22 per share. So nothing new. Cleveland Cliffs has a high of $24. It's not like, again, you may not see no exponential movement on it, but if you can continuously pick the shares up at $20, you can get that nice pop. So you buy the shares at $20, they pop up to $22, you sell out. You can do the same thing. They drop back down to $20, You wait for the shares to get back up to 22, or even chance it more, let it get back up to 23 or 24. You sell out of it. Wait for the stocks to fall back again to $20. It's called channeling. So that is a strategy you can do. Next stock ticker we have is Revolve Group. Again, they had a really good week. The stock was trading early in the week around $69 per share and ended the week at $72 per share. So this is a online retailing group. So they control a number of online retailers. And let's just see if they have anything in the news. Okay, investor observers, should you buy the stock? 2 stocks that can double in the second half. And then Revolve profiting from the grand reopening. So we know that basically people are going back out, and they're not going back out with the same clothes they had in 2019 or 2020. They're coming back with brand new dresses and shoes and pants and things that are more stylish. So this is the Revolve Group. If you like shopping, you know, then I would definitely invest in Revolve Group. It says Revolve offers impressive selection of apparel and accessories with different price points. And so Revolve Group seemed like a pretty good company. Like I said, we all like to shop, and people is coming back shopping again. People like to put on new clothes. People like to look different. People like to go to restaurants and be seen, and you know, that's where we are. So I invested in Revolve Group. I'm pretty happy with my profit. I've made a lot of money on Revolve Group. And if you can see, over the last 6 months to a year, the stock was trading at $20 per share back in July. And so I've almost tripled or quadrupled my money at, you know, $16 a share. The shares are now trading at 5 times as much. So from 16 to $72 per share. So I'm all in on Revolve. Next ticker symbol we have is COP, or ConocoPhillips. Now, ConocoPhillips is an American multinational corporation engaged in hydrocarbon exploration and is based in the Energy Corridor District of Houston. Now, I am kind of bent toward ConocoPhillips because they were one of the companies that I first started doing business credit. I have a ConocoPhillips card that, you know, I use for my business, and then ConocoPhillips was the first company that I started using for, you know, business purposes. So not only do I invest in the company, I use their services as well. So just look at the last 5-day chart, up 2%, and that's pretty good, because if you think about this, if a stock moves 1% a week, by the end of the year, that's about a 50% move. So that's pretty steady. You want to get about 2-3% a week if you can. That was explanatory in the Revolve Group, but I'll take a 1% per week too. And we'll just look at the 1-year chart. So back in July, again, you could have got the stock as low as $40 per share. It's all about reopening. Next ticker symbol we have that was slightly up this week was United Steel. Again, I did a video on last Sunday about stocks to watch this week. And again, Biden had another press conference about what he needed from US Steel and other infrastructure suppliers. So United Steel, or ticker symbol X, was up this week, you know, 1%. But as I said, 1% is not bad for a week. If you add that up, 1% a week or 0.5% a week, that adds up to almost 20-30% in a year. So Xbox. Okay, fast-paced momentum stock. United Steel is trading at a bargain, and I totally agree with this Yahoo Finance article. Fast-paced momentum stock. US Steel is trading at a bargain, it says. Momentum investing is essential and the opposite tried and tested Wall Street adage, buy low and sell high. Everyone likes betting on fast trending stocks, but it's not easy to determine the right entry point. It could be safer to invest in bargain stocks than witnessing price momentum recently. Zacks Momentum Style Score by Zacks Style Score System. Pay close attention to trends and prices of earnings and pretty useful identifying momentum stocks. There are several stocks that have passed through the screen, and United Steel is one of them. A dash of recent momentum reflects interest of investors with a 4-week price change of 6%. The stock of the steel maker is certainly well positioned in this regard. So we're just going to go back to the chart, and I just want to show you the yearly chart. So again, it was the same thing. You got this stock. See, back in back in November, you'd have got this stock at $11 per share. So you'd have doubled your money. And I still think this is going back up to $29 per share. So again, that was a stock of the week. Another good stock that had a lot of activity was Palantir. Now, I've been in Palantir for over 3 or 4 months since they went public. So they went public in October, and now they were at trading at $10, and now they're at solid 24. But the 5-day, if you look at the chart, it is up from last week from $25 per share, and then it hit a peak of 27 and it's come back down. But don't be fooled by Palantir. They're one of the number 1 big data analytics companies. They used to be in San Francisco, and then they moved their headquarters to Denver. But Palantir is a modern data analytics team, and data is the key. Whether you're on Facebook or Instagram or Snapchat or some other website, believe it or not, Palantir is scrubbing that data and looking for references and inferences from the data. So Palantir Technologies, it has great contracts with the government, contracts in the commercial world, and just don't let Palantir fool you. It's not moving as fast as a lot of people want, but it is still a high quality stock. And next ticker we have here is Didi. Didi again is the Uber rideshare company out of China. And as you can see, they had some decent movement. They opened up at $18 per share, and now they're back down to 14. And of course, this is due to the investigation. So, we talked about Chipotle. And so these were the stocks of the week. Again, even when you do decide to finally pull the trigger, keep in the back of your mind, this is how you want to invest. You want to put high quality, mature companies, buy the most of those shares, your Teslas, your Okta, your AMD, your Apple, your Ford. You want to buy the most of these. And then you, in the middle here, you want to do banks, oil, travel, those type of things. We talked about Bank of America. We talked about COP. We talked about Delta, and we talked about MGM. And you can substitute these out. You can do JP Morgan instead of Bank of America. You can do Exxon or Chevron for COP. You can do Love, LUV. And I just want to mention Love just because Love is a well-run company, Southwest Airlines. And I mean, they trade at $55 per share. They may get back up to 60. That was pre-pandemic, but it's a well-run company. They have an excellent balance sheet. So if you are looking to add another travel stock to your portfolio, don't sleep on Love. The other one I have is SAV. I always like to have an alternative. I like to have two. So I never do just one of anything. So if I do one, I do the opposite of it. So if you look at Spirit Airlines and they have the same chart over the last year, they were trading at, well, less than that, but they were trading about $22 per share, and now they're back at 30. American Airlines, again, if you look at the chart, they were trading as low as $11 per share, and now they're doubled. So anyway, just keep in mind how you want to invest, how you want to continue to build wealth over time. And, you know, please like, share, click the notification bell to continuously get these updates. And again, I want to thank you for watching. Thank you for listening. And we'll see you on the next video.